Monday, March 23rd, 2020, Monaco 64, home of alternative economics and contrarian views. So the market meltdown continues overnight as the stimulus package through Congress is held up. I'm going to cover that this morning, what the problem is exactly. Before I do that, I'm going to look at the markets, see what they're doing. Billy asked me to take a break. He's tired a little bit. He's been working very hard, but he's okay. So it's 7:46 a.m. London time. We've got spot gold at 1489. It's down about 9. We opened well yesterday. It went up to 1509. It has come off. The low has been 1482. To be honest, I think now is a time to worry about having physical gold and silver, having ounces and grams. Some of you might have tons. Who knows? I don't. But it's time to stop worrying about these paper prices, these fake prices for gold and silver. And if you can, if you're fortunate enough to get some from a bullion dealer, go ahead. I would, and I have. Last week I got some more silver. Silver is at 1250, down 10. The high's been 1271, the low 1225. So it almost really doesn't matter the prices that we see here. Anyway, the Dow right now, futures is down 823 points. We have been limit down earlier. We were limit down last night after the open for quite a while. Yeah, so right now we're down 4.4%. 5% will trigger the limit down. That's before the official open, of course, in the US. S&P futures is down 3.8% or 86 points. The NASDAQ 100 futures down 3.4%. Sterling is down 10 pips at 116.40. Euro is unchanged, 107.09. Dollars down 0.5% against the yen at 110.19. And dollars unchanged against the yuan as well at 713.40. Crude oil got down to 21 overnight. WTI, it's now at 2023, up about 30 cents. Bond market, government bond market, treasuries are continuing to rally now. The yield now is back down to 80 basis points, down 13 basis points. The 30-year yield is down 15 at 140. We will need to keep an eye on the corporate bond market. I have a feeling the corporate bond market will be in trouble. And why is that? Well, because people are rushing away from corporate bonds and going into treasuries right now. Over the weekend, Germany announced a package worth about 10% of their GDP of new borrowing. And in spite of that, we've got the DAX, the German index, down almost 5%. So it doesn't seem to be working, the stimulus. We've got the German Bund yield, the German government bond, 10-year yield is actually down a couple of basis points at minus 36 still. So the market doesn't buy into it, doesn't buy that these, stimulus will work. So now to the US. Late last week, we were hearing about a 1 trillion package. I think the beginning was 850 billion. And then Mnuchin came out this weekend and said they're moving towards 4 trillion. But it looks like they're going for 2 trillion stimulus. So a little bit like TARP in 2008, the first time that it was voted by Congress, it didn't pass. And that was the time when, after that was when Hank Paulson kneeled in front of Nancy Pelosi and begged her to save Wall Street. So they passed it the next time. They scared everyone into saying the world would end if TARP wasn't passed. So what's going on? Well, I'm going to go through an article, a good article, I would say, from the FT, even though I don't really agree with probably 99% of their ideas, the FT. They still do the reporting, and I need to go through it. Negotiations falter over $2 trillion U.S. stimulus deal. Lawmakers clash over emergency measures to stem economic fallout of the virus. So let's go through it. The Trump administration and congressional leaders struggle to reach a deal on fiscal stimulus measures worth nearly $2 trillion to help the U.S. weather the disease. As jittery markets open around the world, the negotiations hit an impasse on Sunday after Democrats on Capitol Hill said that the proposed deal offered big business an overly generous bailout with limited conditions and scant oversight. They also argue it would not release enough new funds to hospitals. But officials involved in the talks, primarily Steve Mnuchin, the U.S. Treasury Secretary, and Chuck Schumer, the top Senate Democrat, signaled there was still room for a compromise. Staff were working through the night to try to resolve the impasse. And I'm quoting this. This bill is going to affect this country and the lives of Americans, not just for the next few days, but in the next few months and years. So we have to make sure it's good. Schumer said, we're getting closer and closer. I'm very hopeful, is how I put it. And we can get a bill in the morning. So it says, continues, the day had started with Mr. Mnuchin telling Fox News he'd reached a fundamental understanding with Democrats on the terms of the stimulus, but by the afternoon, congressional Democrats were balking at the text and blocked a procedural motion in the upper chamber to advance legislation. The main features of the stimulus would be loans to small businesses so they could retain their workers and direct payments to U.S. households worth $3,000 for a family of four. This is the interesting part. We don't know if the Democrats are just grandstanding before agreeing with something very similar, but this is what it says. The most contentious element of the package, to which Democrats objected, provided up to $500 billion to rescue companies stricken by the sea outbreak, in addition to $50 billion set aside to help the airline industry. Well, bailout, I guess. And it continues. Democrats want assurances that the companies receiving government help would not be able to buy back stock and would restrict executive compensation. They also objected to a provision that would delay disclosure. Well, listen to this. Delay disclosure of the companies receiving state aid, saying it amounted to secret bailout authority. I agree with that. But could the Democrats, again, be just like saying that in public, saying that they didn't agree with it, but eventually they'll vote for it, but they did it reluctantly? It could. I wouldn't put it past them. So that's what's going on. It looks like they're expecting something to go through today. Will it work? As you saw, the German deal didn't work for the market. This deal might work for the market, I think, temporarily. But one thing I think we can be certain of is that eventually they will put something through, trillions of dollars. It might take a while. They might do it today. Mnuchin says the Fed is going to be helping. They're going to be dipping into the exchange stabilization fund. How will the Fed help? Well, I think they're going to do a lot more QE. $2 trillion is like 10% of the U.S. economy. That's what Germany proposed the other day, 10% of the economy. I mean, what will that mean for the pound or euro or dollar in your pocket? It will mean dilution. What do I mean by that? Well, you've probably seen before when public companies do rights issues, when they issue more stock, instead of buying back, share price usually drops because it means there's going to be more shares out there, and the value of the outstanding shares drops because there's more supply. So that's what's going to happen to the money. Yes, there is another, the money is going to be hyperinflated. If they can, they will hyperinflate it. And why are they doing this? Because there's no more liquidity in the markets. The markets have no faith and confidence in anything anymore. I saw yesterday, a lot of Scandinavian mutual funds have frozen bond funds, high yield bond funds. They're not allowing customers to take their money out. And why is that? Well, because they can't find a bid for the components in those funds. And I think that's happening for the whole financial market. And the only way for them to stop this is to print trillions upon trillions upon trillions of dollars, and it's going to make 2008 look like a picnic in the park. So yes, they're going to hyperinflate away your currency. By hyperinflating, I mean they're going to print as much of it, and that's why you need to protect yourself, of course. If you have savings with precious metals, of course, there's a lot of other things that you need to worry about now, but it could help you in the future to overcome the present crisis. The other thing I would say, yeah, maybe have some cash at home. If there's an ICE 9 scenario and they shut all the financial system down, you might need some cash, even though some people think they're going to ban cash. It's all very confusing. We've never been in the situation that we are, so I don't know everything, but I'm just trying to assess the risks, and that's what I think could happen. The other thing that could happen, if the markets and investors lose faith and confidence, you could see the whole financial markets, all the markets collapse as people search for liquidity, as they realize that all this stimulus won't work. That's the other alternative. Either one, you need to protect yourself, in my opinion, with precious metals. This is not a time to think about making money by trading or doing other stuff. This is a time for first keeping your health, and then preserving any wealth that you might have out there. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Twitter, Facebook, BitChute, Steemit, and DTube. I wish you all a great day. Take care. Bye.